Hey everyone, here's a summary of our last quarter 3 at Dwell Capital, what we've been up to managing about 380 units.
Hey everyone, welcome to our RST 1 through 4 quarter 3 2022 review. We are going to go through today kind of our news, the updates, and kind of share everything that's been going on up in Minneapolis at our properties up there. So, John, let's dive into the news, RST 1 through 4.
This quarter changes, we'll highlight our main bullet points here. Just a couple good things and a couple challenges we're working with in Minneapolis. So the first thing to announce is we do have a new on-site manager. She comes with a lot of experience. And then we also have our maintenance coordinator who comes with 20 years experience and has been doing a really good job. We've had to replace both of those positions, which is unfortunately a pretty normal thing in this industry. So, but these people seem to be more long-term minded. We're excited about that.
Yep. We did have something fun kind of happen this last quarter. The Bloom project up in Minneapolis. They are working on the park space there at Highland Gables to do some really cool things. They just literally sent over the plans before we recorded this earlier today. So we'll have that on the screen. But wow, this is really cool. It's part of the initiative to get residents outside, get everything kind of looking, beautifying the outdoor space. So we are really excited about this. Chad and Alex from our team went up there for kind of a grill out with the whole crew at Highland Gables and learn about what the residents would like to see.
Financially, what does that mean for us? It's a grant. So we had to contribute $5,000 towards it, but we're going to get probably an upwards of $50,000 to $75,000 worth of improvements. And you'll see on the plans, it comes with a lot of green space improvements. So that's exciting. On to renovations. In the last quarter, we talked about the premiums we were getting for rents, which were way unexpected. We were projecting higher rents when we initially underwrote this in the $1,250 range across the board for 2 bedrooms, for example, and we've achieved up to $1,600. I'd say the market rate though is probably in the $1,450. So we've been pushing this quarter, last quarter, well, this entire calendar year to try to do as many units as we can, but keep our checking account balances padded enough to pay our 7% preferred return. So I guess to foreshadow a little bit, we would expect the total annual cash on cash returns to be right at that 7% pref. Next year, the year after, when things are finished, the building is updated, that's going to be money back in our account. So it's been a transition out of the COVID rent help scenario that we were in all of 2021 and part of 2020, end of 2020. And then also just kind of getting people back to the normal mindset of paying rents. And now we're heading into kind of another session of the COVID aftermath of more unemployment, higher interest rates. Can go both ways, right? We can get more renters because people stop buying single family homes. They need to rent. So the rents should flatline, if anything. And hopefully we'll see more demand, which we've been getting plenty of applications. So the units that we have vacant right now have applications on them. It's just getting the maintenance or the flips on the units done quick enough. I've got a 6% resale cap, still pretty high for the cities, but are conservative. But with interest rates going up, we're not going to assume 4 to 5% caps exist for a while. But we'll see where that's at. But no plan to sell. This is a Freddie Mac program, which pros and cons. We got a 10-year fixed rate.
Yeah.
No recourse. 30-year amortization. But the prepayment penalty is the trade-off, right?
Right now, I'm very pleased that we locked in a really great rate on these properties. That is a great thing that obviously in the changing rates environment, it's great to look back and see that rate and that term that we locked in on this. So,
well, one thing with agency loans is they are assumable. So if rates keep going up, that makes our portfolio more attractive. Someone would just have to cover the difference in the equity. If that was something we wanted to consider doing, in that case, we could avoid potentially a prepayment penalty.
Yeah.
But that's down the road. Focus on right now. Meeting every week, working through plans and unit turns and staff.
We know we have a plan currently that we have 8 units that we need to get rented out. They are not quite ready, but they're close. So over the next 2 weeks, we're sending up crews. I think actually over the next week, we're sending up 4 to 5 guys from here in Rochester, some handymen that we work with all the time, to go up there and just bust these out as quickly as possible. We can get these units ready to go, getting rented out, and then hiring another maintenance. We have 2 maintenance guys there now. We're trying to add a third just because with wrapping up some of these renovations and then wrapping up some of this maintenance as well, it's a lot to keep everything going. So we're finding that we need one additional person up there.
Yep.
To help
Speed
get
is
that done.
key.
Yeah, that's what we're seeing for sure. These renovations, when they drag on, really hurts the vacancy numbers because you've got a reno that lasts 2-3 months. We're trying to tighten that up, move faster. No, all good things. We're getting renovated units done, achieving higher rate rents, which is exactly what we're looking for, increasing the value of these properties by getting the NOI up when we come to next year or something. So cool. Thank you guys. Appreciate it. Any questions at all, you can always reach out to us at capital@dwellrochester.com. Hey everyone, welcome to the RST V Austin Q3 2022 snapshot review. Today we have live reporting from the field, which we're excited about.
Yes.
So we'll get to cut to our reporter, Alex, is in Austin.
Live.
He's coming to us live with some updates on a few things that we'll talk about here. So take us to Austin. What are some updates?
Yeah, so we are continuing renovations as planned. Rents are still higher than the underwriting, which is great.
Yep.
Studio units are going for $595 right now. In year 3, we had $575 on our pro forma.
Really good property managers in Austin. We have Heidi, and then she has an assistant as well. So they are working all the time with the tenants there.
Yep, and this was also our first quarter with our full quarter with the new 11-plex.
Yep.
And those rents are going significantly up, like $650 to $950 on the finished ones, and tenants are excited about the new renovations in there, and they're bouncing around. A lot of tenants are staying and just moving to the new units, so that's been good.
Perfect. Well, let's cut to Austin, check out some renovations, see how the place is looking lately. Yeah, here we go.
So I'm going to walk you through a quick remodel here that we just did at Blue Line Flats. Got the maintenance guys in here. We just got done with putting some new flooring in. We had some pretty old cabinets here, so I'll kind of show you what we like to do. You guys came in, put brand new cabinets in, countertop. You can see it's pretty efficient. Doesn't cost a whole lot of money, but the upgrade is fantastic. It really adds a lot of value here. In the bathroom, we're able to, again, just put flooring in. Just switched over to BDS Laundry. The advantages of that is they provide the machines. They take 35% of the profits. We take 65%. The machines that we had in here were quite a bit older. With the newer machines, it's better for our residents. They enjoy nicer machines, more reliable, and then they provide all the maintenance as well.
All right, so renovations are looking good. We're really excited about the new flooring that's going in, new cabinets, kind of really freshening everything up and getting these. I mean, these are long-term renovations. These are going to last a number of turns, a number of years. So excited about these. The retaining wall looks good. That was a much-needed repair that got done this last quarter. And then there are only 35 units left unrenovated there. So they are making really good headway on getting through those.
We may not renovate all of them.
Yeah.
You know, as a value add and to resell someday, you want to leave some meat on the bone for the next investor that comes along. So that's what we're thinking there. Yeah, the laundry adds a little bit less maintenance, which saves us money on the expense side, gives us a little bit more revenue, like $250 a month. So nothing crazy on the income, but the expenses add up as well.
Yeah.
And then also the bulk internet service, which adds about $1,500 a month.
Something new we're trying is kind of having the facility pay for internet and then having tenants pay for it from there. So we're excited to try this out, see how it goes. It should, like John said, be a good revenue boost for us. So,
and the ending debt position stays the same because we did acquire those additional 11 units right in the last few weeks of Q2. So going forward, a lot of positivity when things slow down again, when these fully stabilize. The demand in Austin is great. Projections couldn't be better. There's just nowhere else to rent in Austin right now, and we do have a good chunk of the units, and we're putting a good product out there with really good service with our managers.
Yep. So the plan is to continue on as we did last quarter. At some point, we're going to figure out with only 35 renovations to do. We'll have plenty to take us through this quarter and the next, but we're going to figure out when do we stop and what do we do, renovate all the units, and we'll be tackling some of those questions and figuring out a plan there. I'm sure we'll talk about that here, one of our upcoming quarterly updates. But yeah, Austin is coming on great. We're really happy with the team, really happy with the progress that they're making, and The numbers are going to continue to get better as we finish more units and lower the vacancy rate, get more people into the higher priced units. So yeah, that's RST V Austin. Hey friends, welcome to our RST VI Boone, Iowa 2022 Q3 quarter in review. We're going to run through some of the news, some of the numbers, and our plan going forward. We did make a visit down there. We try to get down to our properties once a quarter, just looking through the units, seeing how renovations were going, talking to the property management team. It's always really good to get on site because you start to get a better idea of what's going on.
We're actually getting higher rents with the units that are rented out. The biggest challenge we're having right now is our staffing, and you'll see in our expense ratio, most of the reason that's just a little bit higher than what we underwrote is just transitioning. You're training new people. You hire someone, then you got to find a new person. It kills your budget a little bit. So we've now got a good base in there that we think is going to be a good longer term solution. Nothing's ever permanent in multifamily.
Well, we have 3 or 4 guys there on staff. And then we have a contracting crew as well. So trying to run both teams in tandem to get the maintenance done and get renovations done as quickly as possible.
So the contracting crew that Cordy mentioned is a subcontractor that we're bringing in for quicker turns.
Yeah.
The maintenance crew is 2 guys that are just day to day doing our maintenance, but then when they're not doing maintenance, they're flipping units too. So excited about these guys. You'll see them in the video. But yeah, we'll move forward with that and see how this crew does, and fingers crossed that they stay with us.
Yeah, the unit that we saw that you're seeing here now, the renovated, was leased up before it was even finished. Someone saw the renovations. There's not much like that in Boone's. They're really excited to see that. I mean, everything was nice and fresh and painted and clean, and so if we can get these done as quickly as possible, they'll rent out. We just got to get the work done.
Yeah, and the time that we spent down in Boone with the staff, we were able to talk about some strategy and marketing strategies that they're currently not doing, and we were able to give them a few tools that we're hoping will help with some students from Ames, Iowa that are paying too much in Ames and could definitely overflow to our units, especially now that they're fixed up. Could save them money and would be a great option for them. So yeah, going forward, got a lot of work to do on the renovations. The vacancy's higher because they're not getting finished. But now that they're going to get finished, they should fill up pretty quickly.
And kind of our mindset right now is like we're just pushing as hard as we can to get all these done by spring. Everything that's kind of open and outstanding, we're just putting the pedal down and trying to get absolutely as much done as possible here. So we are working as quickly as possible to get everything completed on the remodeling side.
Yep, weekly meetings with the staff down there and construction guys, just making sure that they are understanding the timelines that we need to hit. All positive things, just takes time again, and once we get these units fixed and ready, we should be smooth sailing from there.
So getting into the plan, then, what we're working on right now is we're focused on working with the maintenance team, working with the property managers, and working on dialing in the schedule of renovations and turns to get as much done as quickly as possible. So we're having weekly meetings with those teams. We are staying on it as much as possible to get everything dialed in and get our vacancy, improve that vacancy number. So that's where we're focused here the next quarter.
Excited to get to work, have everything ready. Hopefully in the spring, we'll see you in 3 months and give you another update along the way. And hopefully by then we've got a lot of units done and filled.
All right, until next quarter.